In our Stacking Up segment today, we are saying Happy Fed Day to Joe Cusick of the Cusick Group. Good to have you on the show.
Thank you, Angie.
So what will you be doing on this Fed Day?
Well, on this Fed Day, I'm going to be watching the bond markets. I think right now that's going to be where you're going to get a flag about what's going to happen going into the number. And if the bonds have been any indication, two things are really being telegraphed right now. One is they're not moving rates now. They're not going to move rates in July. It's less than a 20% probability now going into July. As a matter of fact, we're looking out into December. Believe it or not, we can look out there, looking at these Fed fund futures, and it's telling us it's right around a little bit less than a 50% probability that they're going to raise them into December. While there's still about a 41% probability that they're going to be at 50 basis points as far as where the overnight rates are going to be by December, it's still a low probability.
As you know, the Fed has been the gift that keeps on giving for investors because it's really driving people into the stock market. So what are some maybe Fed-sensitive stocks that traders will play hoping to make a profit?
Yeah, I think the biggest thing is that you look at the stocks that are going to be interest rate sensitive. And if you look at the financial area, and specifically, if you start looking at, you can start simply with an ETF, XLF, right? That's a market ETF that tracks the finance sector.
Basket of financial stocks.
There you go. Start there. Start taking a look at that for those of you that are looking for ideas on how to participate on this. Once you establish whether you're bullish or bearish on that, then what you could do is say, well, I want to look at some stocks. Look at the top 10 holdings in that the ETF, and then start looking at stocks that resonate with you. Some of the names that you might start to see: Visa, Bank of America.
And those two stocks tend to be the stocks that options traders have been focusing on, Joe, for the past, several sessions here now. So what's the options market predicting about Visa? Let's start with that one.
Sure. So, when you think about Visa, you're thinking credit cards, you're thinking, higher interest rates, they could have potentially more profits. Again, dig a little bit deeper on the fundamentals of that. But earlier this week, when I was taking a look at the options activity, I saw that the July $82.50 calls traded. Now, the stock at the time was trading under $80, a little bit under, right around 79 some change. That's a very interesting transaction because as you see more and more of those upside out of the money calls being placed and traded, that's telling you that there's anticipation of potential movement. Now, this is a big move. You're talking about over $2.50 to $3 for these to be profitable. But they're expecting that post the Fed announcement, post Brexit, or however you say it, the bottom line is that they're looking for upside in Visa. And so, as I said, look at the market ETF XLF, see how that's performing. Look at Visa, see how it's performing, see how they match up with each other, and then watch this call activity. This gives you a little bit of indication what larger traders are positioning for.
And Bank of America and some of the other financials, I know there's Citi in there, there's lots of names to look at.
Exactly. And Bank of America was one interesting. Yesterday I saw an interesting trade where I saw the $12 puts being traded. And again, I'm looking at that kind of activity, and the thing is about 14,000 contracts.
So they think Bank of America is going to go down in the Fed?
Well, it looks right now.
Potentially.
Right now, what it looks like, and I would say if it were July as the expiration, yes, but this is September. So I think that there's a potential hedging component in this.
Got it.
And that's where I think that you want to watch. If you start to see put activity in some of these names and interest rate sensitive names, think they're protecting. They don't want to unwind their position because rates are going to move eventually. Why unwind when you have cheap protection out there? And if you're doing it maybe once or twice a year, I think that's prudent.
Puts equal protection. Good to have you on the show, Joe.
Thank you, Angie.